And that's really what starts to cause the fear in this housing bubble implosion, is when people cannot get mortgages anymore. And then if you're an investor, oh my God, they're just running from you. They don't want to lend to you. They will just laugh you out of the place. The Canadian credit crunch is here. Little do people know about it, because you've got 4 banks that are slowing lending, and lending is going negative, whilst one bank continues to lend into this economy.
It'll be painful.
So let's get right to it and see what's going on. But first of all, I just want to show you what happened with lending before the financial crisis in 2008 in the US, because it's quite interesting. You basically see that in the early stages, around the end of 2007, start of 2008, before the banking crisis, you basically had loans that were going negative, if not slowing down here. And then you had a burst of lending in the lead up to that, which was probably similar to what's happening in Canada, of what you're seeing now with the developer loans that have happened. Because basically there's all these struggling businesses, companies, and they just lend more and more towards it in the hope that it somehow stays afloat despite it being so risky. So let's get onto the banks now and take a look at what's going on. This is the Royal Bank of Canada gross loans. Now, what is insane to me is just one bank, the Royal Bank of Canada, over $1 trillion in loans. I mean, that is absolutely insane. Remember, Canada's GDP is only around $2.3 trillion, and just one bank's loan book is nearly half of the entire GDP. So it's absolutely insane. But what is very interesting is Canada's largest bank here, loans are only growing by 0.09% as of the first quarter of this year, which is the most up-to-date data. So loans are practically stalled there at the Royal Bank of Canada. TD, you are seeing loan growth go negative. So you're seeing here, they've nearly got $1 trillion as well in loans. So you've basically had loans which has ticked down here, and you've lost 1.01%. So the fact that loans are coming down and loans aren't growing so much is really interesting. You've seen these spikes before, which were at interesting points as well, like the banking crisis in the US and the pandemic, which is really interesting. But we'll have to continue to monitor this to see whether it actually continues, whether it is the start of a new trend or it's just going to continue higher after that. But looking at the data from the financial crisis, it could very much continue going up right into the crisis. And then Scotiabank is really interesting because this has been flat for a much longer time than any other bank. So obviously Scotiabank does a lot of lending to more developing countries, Caribbean, Central American countries. They have a large presence there, places like Mexico as well. So if you add up just the 3 banks that we've been through here, this totals more than the entire GDP of Canada. So it's just absolutely insane. But Scotiabank's loan book is down 1.28% this year. So it's already on the decline. And then you've got BMO here, which has also been struggling with their loan growth, which is actually probably due to the fact these banks with loan growth going down, it's just the fact that they don't want to lend so much into this bad economy. Because even though the Prime Minister is saying the economy is great,
our economy is very strong.
We know for a fact the economy is really shit, and it's going to get a lot worse. And it's just common knowledge that banks aren't as willing to lend during bad times as they are during good times, which compounds these debt bubble cycles that you see. Because then when everything starts to unwind, what makes matters worse is the banks don't want to lend. And there's a hell of a lot of fucking people in Canada who are totally dependent on getting new debt to pay down their existing debt. This is the case for businesses, as it's the case for many households. So when new debt growth slows, the whole bubble just implodes on itself, because essentially it's like a pyramid or a Ponzi scheme. And then the one bank that is showing consistent loan growth, and you may want to tap up if you're looking for a mortgage renewal and an easy time, or you're just looking to get more credit is CIBC, because their loan growth continues to increase. Now, what is really interesting about CIBC is most of their lending business is in the mortgage industry, is mortgage for residential housing, commercial housing, things like that. So they are big into real estate, and they are the only bank seeing loans which are growing at a significant pace. Now, what's really interesting as well is you've now got individual investors that are the largest shareholders in the Royal Bank of Canada, around 52%. So individual investors own more of some of these banks than even institutions, pension funds, things like that, which is really, really interesting to say the least. And you're seeing a lot of these developers who are going bankrupt, and it's not being talked about much, but you are seeing more and more developers that are going bankrupt. You are seeing more of these projects that are going under because they can't sell all the pre-construction units because nobody wants to buy it.
We're seeing situations where there's up to 30% failure rate amongst closings.
So it's really interesting because you've got to think, you put all this together, the fact that the loan growth is going negative at 3 of the 5 banks and one of them is flat and the other is growing, when you consider what has happened to these loans for condo developers, you've seen this just skyrocket. And now even the mainstream media, you know, they're jumping on the bandwagon and saying condos are no longer considered a good investment. And I mean, no shit. We know this.
Condo sales in some major Canadian markets are continuing to drop to lows not seen in decades. It has some condo owners looking to offload their properties, worried that things will only get worse.
Those considering a purchase for investment purposes may want to think twice, or at least wait until the market recovers. One condo owner who asked not to be identified said he's lost $140,000 when calculating all carrying costs, including maintenance and lawyer fees and mortgage costs. The owner had purchased a 1-bedroom plus den condo in Scarborough for $489,000 6 years ago when the market was at its peak. And bear in mind, that's 2019. We're not talking about 2021, 2022 here. And still, they lost $140,000. So, you know, these losses that are occurring in the condo market, they are continuing to happen here. And what's really interesting is when you look at what's happening with lending, you are seeing 2 things happening. You are seeing the real type of risky lending that is skyrocketing. Meanwhile, you are seeing the actual normal type of lending where they're cutting back on it. And the main reason they're doing this is because they would probably like to cut back on lending in all of their sectors right now. But the fact is, they need to keep this bubble going, and they're trying to keep all these developers going, even though all these developers are not going. They're continuing to go bankrupt. That's the one thing they're doing for sure. But the fact is that just lending, throwing money at a problem when you cannot get the buyers is just showing how bad this situation is likely to continue getting, because we're not talking about small numbers. I mean, it was small numbers back in 2019. They were only lending around 17.2 billion, but now that number has gone up massively to 85.1 billion. And you just have to remember the total loan loss provisions for these Canadian big banks are in the ballpark of 5 billion total for all the banks. And you've got this lending of 85.1 billion. And the thing is, when you get into the details of all these projects that keep going bust, you keep hearing the same thing, that they had like $85 million worth of loans when they had only like $10 million worth of assets, and they had multiple mortgages with different banks, with different investors, and there's just so many people who are potentially on the hook for these losses, because it's average people at the end of the day who are going to feel the pinch when the banks stop lending. And that's really what starts to cause the fear in this housing bubble implosion, is when people cannot get mortgages anymore, because you can be a person who's like, you know what, it seems like the real estate market is bottoming right now, so I'm going to go and enter the market. But wait a second, I need to get a mortgage pre-approval. And then you go around and nobody wants to lend to you. And then if you're an investor, oh my God, they're just running from you. They don't want to lend to you, they will just laugh you out of the place. And I've been in that position before because we were looking at buying an investment property in the UK back after the financial crisis. And to basically sum it up, it was a total disaster. Try and get a mortgage and you were just getting laughed out of the banks, and what the banks actually wanted to get the loan going was just completely insane. It would just be unimaginable for Canadians to imagine right now, considering what they've seen in the past 20 years of lending, because all they've seen is banks just get easier and easier with lending. So it's going to be a harsh reality when it hits home that banks don't want to lend to you anymore. And to get into these markets, which are extremely leveraged, you're totally dependent on getting that debt. So it's just a nightmare really in the making. So we'll have to continue to monitor what happens with the loan growth as bank earnings get updated throughout this year. So anyway, guys, I want to thank you for watching this video. If you've enjoyed this video, I'd highly recommend you check out that video there. And then if you're looking for a VPN and also want to help out the channel get the best VPN, then go to ExpressVPN. Link is in the description below. I will see you in the next one. Take care, guys.